Welcome back, everyone, to NYU Grads Daily Podcast. It is Wednesday evening, September 6th. Really glad to go through today's markets. A lot to cover today. And the theme of the show today is going to be the angel number 4444. So what happened today was pretty indicative of what I've been saying is if yields are sticky high, risk assets like stocks are not going to do well for the long term, right? They both can go up, like yields can go up and risk assets could go up together, but not for too long. And today it resolved and one went the other way, which was risk assets. So taking a look at just the general market, the Dow was down 198 points at the close, which is about a little bit over 0.5%. The NASDAQ led down today. It closed down 148 points, which is 1.06%. And right behind that was the S&P 500, which was down 31 points at 0.7%. The Russell, which was down much more yesterday's session on Tuesday, was down today as well, but not as much as the others. So let's see what happens on the Thursday session with the Russell 2000 and the mid caps. When you take a look at breadth today on Wednesday's session, we had 85 new highs, 281 new lows, so some deterioration there on the downside, and 28% were advancing versus 67% of shares declining. And we finished the day off at 67% of shares are trading below the important 50-day moving average. This number has been ranging anywhere from 57% below the 50-day to 72% below the 50-day. So we just keep bouncing back and forth here with that metric. When you take a look at sectors today, pretty much basically all sectors were red. That what should be concerning everyone is that technology is leading to the downside today. It was the biggest loser of all sectors. Then you had consumer cyclical, right behind technology, communication services, a third worst performance of the day. The least red sector was energy, and energy has been very bullish of late, especially with oil. That's not going to bode well for inflation, as I mentioned on the last podcast. When you take a look at some of the shares across the board, the Magnificent Seven, all of them finished down. So Microsoft down 0.2%, Apple down big, 3.5%, Nvidia down 3%, Amazon and Tesla down over 1%. You had a few consumer defensive names. These are companies that typically will pay a pretty good dividend. They're fairly safe, right? Like Walmart, Costco, Coca-Cola. Those type of names, they were kind of flat. They were green, but they were like up 0.5%. And you had medical device companies that were green. You had Eli Lilly that was green. But and Exxon, obviously, and Chevron were green in the energy patch. But everything else was pretty much red today. I'll share some of the sector analysis, just a sea of red, basically. Kind of switching gears here. So one thing that I mentioned on many times is that when you have a high volume node, which is an area of congestion for any stock or indices, it represents a price level where there was a lot of trading between buyers and sellers. And that level typically will become resistance or support depending which way prices are going. And it acts as a magnet. And as soon as we broke down from some of the recent highs of last week, we kind of just accelerated in the elevator to almost 4,444 on the ES today. And as soon as we got near that, it reversed and started to bounce a little bit. And that's kind of the context of today's action. So you want to watch 4444 on the ES. If that level breaks down tomorrow, Friday, or even next week, we're going to just take the escalator or elevator to 4368, that area, 4350-ish, to test that area again. And it might hold, it might not, I don't know. We'll just have to see how it goes. As I noted, energy and utilities were both pretty strong today. Tech led down. I noticed at 2:30 p.m., breadth was starting to pick up, as well as the volume of NYSE up-down volume. It was the volume up was picking up. And I thought, all right, maybe they'll try to bounce this a little bit into the close after 2:30. But when you look at the breadth volume, it was up, but very feebly. Like you'll see when I post a chart, it was nowhere near Monday's gusto, and nowhere near as yesterday's red selling volume. So it was kind of a fake out, and we closed. I guess we limped into the close. Let's say, right, like because we were down much bigger than we were at the close, so it recovered somewhat, but it was still a pretty nasty day for bulls. What stuck out and was strong today? Extreme Networks, a freebie that I gave out as a spotlight stock. They closed relatively green, right? Like in a day where you have a lot of red. I'll see where they closed at today. They were down, but not by much. Like they were down 19 cents, and it seems like it's kind of consolidating here. The only thing that concerns me is that it's now living underneath the 50-day. Again, if you are already in Extreme Networks, I would be very, very cautious depending where you got in. If this price action breaks down below 26, or even, which is like 20 cents away here, so it's a little risky right now. If it goes under 25, I think it's best to just move aside and wait until we can create a new balance area, or start trading above the 50-day moving average on this one. Another strong stock today was ROKU. I have not been following ROKU's news. I made some cash on the way down in 2021, and I haven't touched it since. But ROKU closed up 3% today. It closed lower than as high as it was during the intraday action, but it did still close up almost 3%. And Sweetgreen, the eatery for salads, closed up 1% today as well. That's kind of just hugging the 50-day moving average for, I would say, since August 8th. It's literally just hugging the 50-day. So I don't have a position in Sweetgreen, but I think, there could be a nice little cup and handle forming here. If Sweetgreen starts to pop above the 50-day and can get above 16.5 on volume, I think that's a buy for me. Again, I'm not your financial advisor, but take a look at Sweetgreen's chart. It's not too bad, and it's healthy food. The 10-year yields were strong. All interest rate products were strong. All interest rate sensitive sectors were weak. That's all I really have for you guys today. Just keep watching the yields. It's so important. When you see yields high and stocks high, someone is lying. either yields are going to go down or risk assets are going to go down. They can't keep going up at the same time forever. Maybe one session, maybe two sessions at most, but typically it will resolve in one of those groups of investment classes going the opposite way. There is some economic data coming out this week as well. I'll post a link to the calendar so you can follow along day by day. But on Thursday session in the morning, we're gonna see before the open initial jobless claims. Again, it's gonna be that same narrative. If the job market seems strong, people are going to say, oh no, the Fed can't cut rates soon. That's going to be seen as bad news. If more people are claiming unemployment, that's going to be considered great news. Yeah, more people are losing their jobs. The Fed's almost done doing their inflation fight. Maybe we can stop. Maybe we can finally start lowering interest rates. It's a wicked and sick narrative, but that is the game that we're all playing right now. So you have to watch out for this. A lot of Fed heads are speaking on Thursday. You have the Philly Fed President Patrick Harker at 9. You have Austin Goolsbee for Chicago speaking at 11:45 Eastern Time. You have the New York Fed President John Williams at 3:30 before market close. And at 3:45, you have the Atlanta Fed President Raphael Bostic all speaking on Thursday. Oh, and after the close, you have Dallas Fed President Lori Logan speaking. So that is quite a roster of Fed heads talking on Thursday. So that's going to be a very big headline risk all day. And Friday, you have wholesale inventories and consumer credit numbers in the afternoon. So that's it for me today. Hope you enjoyed the podcast. I forgot to keep reminding everyone, if you haven't subscribed, please do me that kindness and subscribe on Substack. It is free. You'll get great content, podcast daily on macro and micro for finance and stocks, and there's more coming. You also get my intraday analysis on Substack notes in real time, and I'm working hard to push out great content and growing the community. So thank you so much again. I will see you on the next podcast. Have a great day.